So, Cathie Wood has just talked about Bitcoin. This time, she shared her thoughts on the potential for a Bitcoin ETF and why institutions are pushing up the price. Listen up, this is really important because this could have a huge impact on the price of Bitcoin. So I don't know about you, but back in 2017, I was in crypto. I was actually working full time in the industry, and I was eagerly awaiting the launch of the first Bitcoin ETF in the United States. I was told it would pave the pathway for institutions to finally enter the market, which would send the price all the way to $100,000 and higher. Yeah, that didn't happen back then. Instead, ETF application after application was dismissed by the SEC on the grounds of potentially fraudulent and manipulative practices and the need for the SEC to protect investors and the public interest. So if you're skeptical about a Bitcoin ETF being launched in the US, I get it. I've been there myself. I thought there would be one already by now, and I have to hold my hands up and say I was wrong. However, as Cathie is going to explain in this video, with a little bit of my input too, things are very different in 2021. Today, things are now beginning to line up in a way which could lead to a US Bitcoin ETF this year or early next year. In this video, I am not going to hype anything up. I'm just going to explain the facts and the possibility of a Bitcoin ETF and what this means for you. So let's get straight into it, and I won't make you wait. Let's jump straight in to Cathie sharing her thoughts on a Bitcoin ETF and institutional adoption.
Bitcoin is on everybody's mind right now. Your next gen internet fund has a very large position in the Grayscale Bitcoin Trust. Your thoughts on this? Your thoughts on Bitcoin, a Bitcoin ETF for 2021, is it coming? And do you have any concerns that the Grayscale closed-end fund still trading at a pretty significant premium?
Well, the premiums come down quite a bit. I think now that we know that the next SEC commissioner is going to be David Gensler, who spent the last few years at MIT teaching a class about blockchain technology, Bitcoin. I think he understands the technology and he understands the currency itself. So I think the probability of an ETF has gone up. We also know that the director of research for crypto in the crypto space at the SEC has been promoted and will be reporting directly to Gensler. So again, I think we have individuals now involved who really understand the space, and I think the likelihood has gone up. What has surprised us, we expected institutional interest to pick up this year, and it certainly has, but the way in which it's picked up has surprised us. I don't think we ever thought there would be broad-based substitution of Bitcoin for cash on corporate balance sheets. So we find that very interesting. If all corporations in the United States were to put, I think it's, 10% of their cash into Bitcoin, that alone would add $200,000 to the Bitcoin price. Now, we obviously do not believe this is going to happen very quickly. We're talking about maybe the equivalent of $900 billion market cap equivalent for Bitcoin. That's less than half the price of the Apples and Amazons of the world. So this has to mature a little bit before broad-based adoption can take place. But we're very reassured that companies like Square and Tesla have chosen to allocate. They're on the right side of change when it comes to innovation, and therefore we think it's wise that they diversify some of their cash. And I think the biggest surprise to many Tesla doubters is that it is now in a position where it has that much cash that it is diversifying.
Okay, so a few interesting points here. The first is that David Gensler is to be the next chairman of the SEC. Having previously taught about blockchain at MIT, this is someone who actually understands the industry. And I mean, clearly, if the people who are supposed to approve an ETF don't understand Bitcoin, that's a big stumbling block. So the appointment of someone who finally does is effectively removing that obstacle. Also, in just the past couple of weeks, 2 Bitcoin ETFs have launched in Canada, with the first to launch receiving a ridiculous $421 million of inflows in just the first 2 days after its launch. So when we talk about the US approving a Bitcoin ETF, this isn't just speculation out of nowhere. Their Canadian neighbours have already approved 2 ETFs in 2021, and the demand has been spectacular. At the same time though, we have to question the why. Why would the SEC approve a Bitcoin ETF? Well, to answer that, let's go back to why they didn't approve one in 2017. There were 2 main points which kept coming up. Number 1, potentially fraudulent and manipulative practices. And number 2, for the protection of investors and the public interest. So let's start with number 1, fraud and manipulation. And let's see if things have changed since 2017. Tether. The Tether stablecoin created by Bitfinex has long been accused of artificially pushing up the price of Bitcoin by creating new USDT coins and using them to buy Bitcoin. So this theory has been circulating since I first entered the crypto space, and Tether have done some pretty shady things. I mean, do you remember that time they changed their website from saying that each coin was backed up by $1 to saying that each coin is backed up by $1 or something equivalent? In an industry that prides itself on transparency, that's not good. In fact, I've been a critic of Tether for a long time. All the way back in January 2018, I recorded this video sharing why I don't like their lack of transparency. But were they really pushing up the price of Bitcoin? Well, a report for the Center for Economic Policy Research took a look into it and concluded that they found no systematic evidence of stablecoin issuance driving cryptocurrency prices. And literally the name of the paper was "Stablecoins Don't Inflate Crypto Markets." But even better than this, in just the last week, Tether have settled their case with the SEC, ending the 22-month court case and paying just an $18.5 million fine. While to us that may sound like a lot of money, analysts have noted this is just a slap on the wrist for the likes of Bitfinex and Tether. Also, under the terms of the settlement, Bitfinex and Tether will begin providing quarterly reports describing the composition of Tether's reserves, providing greater transparency into Tether. So for many following cryptocurrency, this was a landmark moment. Tether has long been held up as the main reason why a Bitcoin ETF could not be approved. Well, with this settlement with the SEC, the relatively low fine compared to the value of Tether, and the greater transparency into Tether in the coming years, one of the major systemic risks and hurdles to a Bitcoin ETF has now been removed. Okay, so that's obviously good news, but still, let's look at reason number 2, to protect investors and the public interest. So for many years, people have been able to buy Bitcoin by signing up to apps like Coinbase or Crypto.com. Today, you can even log on to PayPal and buy your Bitcoin on there. So clearly, regulation is not stopping people from buying Bitcoin, nor should it. What exactly is the regulation doing then? Well, because there is no Bitcoin ETF on the stock market, all the current regulation does is it stops people from investing into Bitcoin via their tax-sheltered accounts. So think ISAs in the UK or 401ks in the US. Or so you would think. Because where there is demand for something, people will always find a way to buy it. So instead of a Bitcoin ETF, there are 2 main places that people are effectively buying Bitcoin on the stock market today. The first is through the Grayscale Bitcoin Trust, which trades under the ticker symbol GBTC. So Grayscale hold the Bitcoin for you, which means when you buy GBTC, you're effectively getting exposure to Bitcoin's price. However, Grayscale charge a hefty 2% fee per year. Why so high when it's effectively a passive investment? Well, because they can. After all, you can't buy a Bitcoin ETF, so this is your next best option. On top of that, shares often trade for a premium above the amount of Bitcoin that Grayscale actually hold. As we can see here, that premium rises and falls, but as an average, we can say it's around 15% higher than the actual price of Bitcoin. So when you buy through Grayscale, you get charged very high fees and you're buying less Bitcoin than you paid for. not exactly ideal and hardly protecting investors. So what's the second option? Well, this one is even more ridiculous because the company Microstrategy are effectively turning themselves into a Bitcoin ETF because they keep raising money to buy more Bitcoin for their balance sheet. So much so that Morgan Stanley recently upped their stake in the company to over $2 billion and now hold 10.9% of their shares. It sounds ridiculous, I know, but if you've been following MicroStrategy closely, you'll know basically the only reason anyone buys their shares anymore is to get indirect exposure to the price of Bitcoin. That's why their shares are rising and falling in tandem with Bitcoin's price. So the point is this: people are already buying Bitcoin. They're buying Bitcoin outside of the stock market, as they have done for years. They're also buying it on the stock market too. The demand is already there, it's clear to see. But because there is no good product to buy Bitcoin through on the stock market, people are getting ripped off when they buy it on the stock market today. So if you're the SEC, what can you do to protect investors? Well, clearly the demand is there and it's not going away. So they need to do as the Canadian regulators have done and just give investors a way to buy Bitcoin without getting ripped off, a good product on the stock market. For example, the Purpose Investments Bitcoin ETF in Canada charges a 1% management fee, half that of Grayscale. And so far the premium is just 0.8% on average, around 20 times lower than Grayscale's average. Here's the key thing to understand. Having an inefficient, expensive product like Grayscale instead of a Bitcoin ETF just means that Grayscale have a monopoly on the market, and so they can offer any terms they like. I mean, in an ideal world, maybe the SEC would be happy if people simply didn't buy Bitcoin at all. But in reality, if they don't approve an ETF, they simply push people towards an expensive product where they're getting ripped off. So, I could highlight how institutional on-ramps are more developed than they were in 2017, how things like custody solutions are 100 times better today, or how regulation surrounding exchanges has become so much stricter. All of those are true, and all of those will contribute, but the real reason the SEC will eventually be forced to approve an ETF is because as long as they don't, they allow Grayscale or ridiculous companies like MicroStrategy to have an expensive monopoly, and people are getting ripped off. As far as how a Bitcoin ETF would impact the price of Bitcoin, I can't comment specifically because I don't know what the price of Bitcoin will be at the time the ETF launches, and that's obviously quite an important factor. I've talked numerous times about how Bitcoin moves in these cycles. Well, part of my thinking is I wouldn't be surprised if the launch of the first Bitcoin ETF in the US is actually at the peak of this cycle, similar to how the hyped up Bitcoin futures launched at the peak of the last cycle. Again though, it really depends when they launch and it depends on the price. I mean, if it takes longer and the price has crashed, then it could instead be at the bottom of the next cycle and it might even trigger the next bull run. I can't say until I know the timing and the price of Bitcoin. What I will say though is that long term, a Bitcoin ETF will ultimately do three things. Firstly, it will provide validity to Bitcoin in the eyes of those who currently doubt it today. Secondly, it will allow regular people to buy it on the stock market and not have to worry about looking after it themselves. Long term, that should only increase demand. And finally, the most impactful of all will be when institutions with trillions of dollars now have a low-cost way of buying Bitcoin. Even if they only allocate a small fraction of their holdings, just 1% let's say, that will provide a huge excess demand for Bitcoin.